Thank you so much for joining us today to talk about all things FinTech. I'm Devon Sherman. I'm the Managing Director of MassChallenge FinTech, which is a program we launched this year that drives intentional partnerships between FinTech startups and enterprises in asset management, banking, insurance, retail, and transportation. In our first year, over 70% of our startups launched pilots with an enterprise partner in less than 6 months, tackling everything from modernizing charitable giving to creating new insurance products for the gig economy. So it's a really exciting time in FinTech, and we're looking forward to sharing some trends we're seeing in the space. I'm thrilled to be joined by a very impressive panel who collectively has deep experience as entrepreneurs, investors, and executives in FinTech. So to kick things off, I'll have each of our panelists briefly introduce themselves, and then we can dive in. So Phil, why don't we start with you?
Hi everybody, I'm Phil Edmundson. I'm the CEO of Corvus Insurance. We are innovators in the cyber insurance space, and I am a Babson MBA alum. Nice to be here with all of you.
I'm still reacting to, after listening, that finance is not sexy. I think finance is very sexy. So let me start saying something like that. But my title today here is I'm the father of Gabriel. He's a senior at Babson, and my wife, Leila. So that's what I'm doing here today. But besides that, I'm a board director of Millicom, which is a NASDAQ-traded company. And also, I'm the former president now and senior advisor to Western Union, former president of Western Global Money Transfer.
My name is Matt Harris. I'm a partner at Bain Capital, where I work on the venture capital side. And for the last 20 years, I've focused exclusively on financial technology, FinTech. I'm fortunate enough to back both Phil and Jason, so I have very high market share on this panel, and reasonably high market share in FinTech more broadly. And I'm thrilled to be here. I apologize for not bringing $10 million, which apparently is one of the, there's time, Steve says. Thank you for that. But we're just really honored to be here, and thank you, Devon, for having me.
I'm Jason Moens. I'm the VP of Product at Flywire, which is an international payments company. I have a couple of Babson connections. I could say that my origin coming up to the Boston area was Babson. I met my now CEO and partner in crime who started a couple of startups at Babson. I have Babson as one of our clients. We help with international students and their payment challenges. Yeah, that's it. Happy to be here.
Great. All right, well, thanks everyone. And diving right in, Matt, I'll direct this first question toward you. So financial institutions are becoming more and more open to working with FinTech startups. And while we often hear the success stories, it's really hard to make those partnerships work. Can you talk about how the relationship between the big players and the small players has changed over the last decade, and what you would identify as the key attributes to what makes a winning enterprise startup relationship?
Sure. So going back in time, before that 10-year phase where FinTech has really kind of been galloping, banks and other incumbent FinTechs, financial services companies, were like the worst customers to have. They had bizarre requirements, endless requirements. They would meet with you 30 times. You'd never really get a clear answer. And so we would always advise startups to avoid financial institutions. But one of the amazing things about the rise of FinTech and of companies like Lending Club and SoFi and Betterment and these brand name businesses that you've heard of and that banks have heard of as well, is that the banks and insurance companies and broker-dealers had to react. They were driven to say, you know what, we may actually lose some market share, and they've become much better customers, much better partners, and are now, I think, legitimately interesting places to build a business. But it's still hard. I think there are certain financial institutions, and you can figure this out pretty easily, who figured out how to do procurement in a way that's friendly to young companies. You see them at MassChallenge, and we see pretty clearly which ones are in. And then there are those that are still out, those that would prefer to buy from Accenture and IBM and call it a day and take zero vendor risk. And so the key for startups is knowing which is which, is to be patient, is to stick to your guns on not customizing anything, Because if you say no long enough, they will eventually cave, and you can sell them the product that you have versus the one that exactly they want. So it's a doable thing. It's a surmountable challenge newly, but it does take persistence and creativity.
Great, thanks, Matt. And Jason, a lot of Flywire's growth story revolves around successful partnerships with big players across a range of industries. And when you look at Flywire's target market, it really exemplifies just how cross-industry FinTech has become. And in particular, we're seeing a lot of intersection around health tech and FinTech. Can you speak to how health and wealth are linked from Flywire's perspective and how these sectors can continue to borrow from each other going forward?
Sure. So I'll take the angle, Flywire is a payments company. I can speak most notably about the experience that we have in that space. As everybody in the room certainly knows, the US has the most amazing healthcare system in the world. Yeah. I see that everybody it's unanimous. There's a whole bunch of patterns of change that we've seen in US healthcare in particular, where receivables for a long time were largely being borne by other parties and self-pay. Your guarantors, the actual patients and families were paying somewhere about 5%. Needing to be able to invest significantly in like righting some of the shortcomings there, it was really low on the totem pole. Those numbers are trending high very, very quickly. You're seeing now those numbers approaching 30, 40% of out-of-pocket coming from patients themselves. And as a result, just out of necessity to be able to manage those receivables, you see these patterns emerging in the healthcare space that never had a necessity before. And you see, for example, our company and Western Union certainly focus a lot on the international cross-border aspect, being able to support some of those challenges. You now have hospitals going and setting up feeder systems in other countries to be able to attract and retain a growing customer base from other parts of the world that are, for better or for worse, paying, upfront, and they're making significant payments to avoid some of the challenges that they have on the on domestic payments. And also, there's experiences that we've all had in going to buy something from, you name the e-commerce player, Amazon, or whoever. There's patterns there that are being adopted as well, so that when people go to make payments, they're finding their preferred method of payment. If Dr. Rogo has to go and make a payment while he's visiting a hospital, if he chooses to pay via M-Pesa, then he should be able to pay that way, and there's friction when you're asking him to pay via some other mechanism. And so adding additional options to pay, allowing people to pay upfront or in installments over time, these are being added. You see a lot of creativity around credit, creative lending and extensions into new vehicles that were not really necessary when it was a very small percentage, and now are becoming much more critical in that process.
Great, thanks, Jason. And so whether we're talking about FinTech or health tech or really any innovation, the regulatory environment is intense. And so Phil, you have navigated the regulatory environment of InsurTech as an entrepreneur, an investor, and an executive. What makes the insurance industry so challenging in the US? How is Corvus navigating that? And what are some of the big lessons learned you've realized along the way?
So thanks. It's a bit of a setup question. All panels try to prepare, right? And it will probably surprise you to know that I would be much happier from a regulatory point of view to be working in Kenya or most African countries than here in the United States. And that's because most African countries, most countries in the world have one regulator for commercial insurance. But here in the United States, we don't. We have 50 states, the District of Columbia, Puerto Rico, and the other possessions, if you want to get comprehensive about it. In each one, dozens of people in my small organization need to have individual licenses, and we need to make state filings and collect taxes, either us or a broker, on every transaction that we're engaged in. And what maybe started out as consumer protection for businesses has become more of a toll booth, unfortunately. And no incumbent in any industry necessarily wants to make that a storm about it all. And so I'm hoping there's an entrepreneur in the crowd who will take this on, build an app so that we can manage our regulatory process more efficiently. It's a huge market, insurance, but it is really a challenge.
Great. And Matt, do you have anything to add or elaborate on that, just as your experience as an investor in the insurtech space?
Yeah, so the two huge challenges in insurance innovation are one, this patchwork quilt of innovation that Phil talks about, and the other is the requirement to raise endless balance sheet. So lending and insurance, as distinct, for instance, from investment management or payments, have this ongoing balance sheet requirement. You could simply be a broker selling other people's products, in which case you're free and clear from balance sheet. But if you want to do what Phil is doing, which is truly innovating at the product level, you need to be very close to that risk-bearing function. And that requires lots and lots of money over time. And I would say venture capitalists in general prefer businesses that have finite capital requirements to those that have infinite capital requirements. And you need to figure out clever structures, much as Corvus has, to where you can be innovative, get your disproportionate share of the profits, but not have an endless requirement to raise capital for the balance sheet.
Great. And so, you know, one of the challenges with regulation is that it's different state to state, it's different country to country. And taking a step back, different regions have reacted differently to the rise of modern fintech over the last 10 years. So Odilon, during your career, you have worked in a variety of different regions in the US, in EMEA, Latin America, the Caribbean. From your perspective, what hubs or what cities have been really open-minded and adaptive about fintech innovation, and what really sets those regions apart?
Yeah, Western is the global leader in retail and digital around the globe, and we work with 200 countries and territories around the globe, right? So it is all the regulation of those 200 central banks, imagine that. And what I can tell you is that innovation is not only coming from the United States, it's coming from every place. So 4 months ago, I was in India, and I was able to spend like 2 days just listening to startups and making a few investments in some startups and so forth. And it's amazing the amount of innovation in India. And India has something that the United States doesn't have, which is a supportive government, building a framework for innovation in digital, like the stack and other things that are coming. So even though the central bank is very, I would say, conservative in India, you have a government pushing back on the central bank and creating that kind of regulation that's really facilitating India. And you can expect a lot of innovation coming from India in the next years. China, the same thing. China, a little bit different. Then it's about who you know in the government. But when you know the right person, I mean, you have the right support, and they can innovate, and they have unrestricted capital. So I think China also, I think, is the other one that can challenge the US leadership in the future. Singapore is a hub by itself, much more like capital driven than anything else. You have the northern countries in Europe, that is about the population. The population is highly digital savvy. And then you have all of that innovation happening because the population is driving all of that innovation. In Africa, we're talking about Kenya. Kenya is tremendous. I was with the CEO of Safaricom 1 month ago, and we were celebrating like Western Union opened its platform for the first company in the world for M-Pesa in Kenya, because we need to. They totally dominate the local market there, innovation after innovation. So I see all of that happening around the globe, and I think the question is, where are the United States on that? And I think the United States has everything. The United States has the capital, unrestricted capital, tremendous amount of capital, has education, has entrepreneurship, but I think the part that is missing is really some government facilitation, and we can start talking about the licenses in different states instead of a federal license. You can go a step more and say, yes, definitely you need to regulate, but you also need to facilitate. And that's the big difference today between US, China, and India, and I would add to that Saudi Arabia also, that's doing a great job on that. So I look forward to the day that it's not going to be about regulating and telling what's wrong, but it's going to be about facilitating.
Great. And Jason, anything to add to that as you've grown Flywire internationally, and also Phil, as you look to grow Corvus globally?
Sure. I mean, I think that Odilon hit it right on the head. I think that what it forces, just thinking about it from the other side, it forces a certain amount of creativity, it forces alignment, it forces understanding, what are the goals of the maybe 80 regulators that you're trying to satisfy. And to some extent, if you're able to do that, if you can surround yourself with a group of people who see that as one constraint that you're operating under, it is yet another challenge of which any startup is going to be trying to overcome many challenges. If you can understand the root of why regulations are in place and align yourself with what they're trying to affect in the first place, you can often help to achieve their goals, perhaps through a novel or innovative way, in which case they could actually help to help springboard or open doors for you. So certainly there are challenges there, and in the United States there's no shortage of them. But understanding kind of the basis for where that regulation is and the parties themselves, and that may be complicated given state to state different opinions, you can see that as an opportunity as well.
Great.
Yeah, I think in my experience in my prior gig, we had a European hub in Paris, and we did business throughout Western Europe from that hub in a very easy regulatory environment, and that seemed to recognize the distinction. Now, the businesses I've run are in commercial insurance, and there's a big distinction between protecting consumers for auto insurance or homeowners insurance, where perhaps they're less informed, or there's a lot more at stake for individuals than in something like commercial insurance, and certainly the type that I've been engaged in with where the organization we're selling insurance to is much larger. And so unfortunately, in this country, we still have a lot of consumer protection mentality in commercial insurance that is from the consumer space. And so we need to right-size that, and at least based on my experience in the European market, it's much more adapted to these different segments.
Mm-hmm. Great. So as you can see from the conversation, FinTech is very multifaceted right now. And the theme of Babson Connect this year is on the future of entrepreneurship. So I'd love to hear from each of you, what is one theme or topic that you feel will have the biggest impact on the future of entrepreneurship as it pertains to FinTech in the next 5 to 10 years? And feel free to elaborate on it as well. So anyone can chime in first.
I'll jump in. So I've been thinking about this a lot. FinTech over the last 10 years, really 10 years ago, there was no such thing as FinTech, and now it's about 15% of the entire venture business goes into financial technology, which is quite a change. But I've become convinced that we're kind of at the end of that phase, in a sense, and there'll be, actually, I think, fewer FinTech companies going forward. And financial technology will be more like an ingredient that people use to build their business. In the same way that, I'm old in this business, but 25 years ago, we used to talk about internet companies. And now no one talks about that anymore. It's sort of a silly thing to say, because the internet is just sort of an ingredient that you use to build your business. Mobile. There were mobile companies 10 years ago. There's no mobile companies now. Every company of any stripe is using mobile just as they use cloud, just as they use internet. And FinTech is headed in that direction. And so I think what entrepreneurs need to realize is starting a payments company may feel a little dated. If you have a software company that serves small businesses, you should be integrating payments into what you're doing. You should think about integrating lending into what you're doing. Maybe you know things about your customers to where you can facilitate extension of credit to them in a way that a bank can't do as efficiently, as quickly, with as much information. Similarly with insurance. So I think in 10 years, not 2 years, but in 10 years, we'll surely be talking less about FinTech companies and be talking more about how financial technology is a monetization lever for technology companies of all types.
Matt has a much bigger view than I do, certainly, given what he does for Bain, looking at all types of FinTech. InsurTech was a word that I first heard 3.5 years ago when I was thinking about my next gig. And there was a little conference in Las Vegas 3 years ago, and there were 400 of us that showed up. Last year, in its third year, that conference had 8,000 people. Next year, I'm not sure, next week, the fourth event, I can only guess how many thousands of people will come. So I think the trends are going faster as we figure that out. I have the blinders of an entrepreneur because I'm just so deep into cyber insurance. But it's a not dissimilar theme at the same time, because the insurance industry has built a product called cyber insurance. But it has all these moving parts because cyber risk, in fact, influences almost every type of organization and every type of effort. So in insurance, we have property insurance, we have liability insurance, we have products liability, all these different categories, and each one of them is being infiltrated by cyber risk. The insurance industry is still a little unsure how to manage that. That's part of why I started Corvus, is because I see this opportunity to look at cyber risk as a peril. So the same way that Matt says, you see a trend coming along, cyber risk in my case, and if you can see where it's going 2, 3, 4, 5 years from now, you'll see how it becomes an essential part of a huge, in my case, $250 billion industry in the United States. And that's part of the change that I think is fun and challenging for all of us here.
I would just echo what Matt said. So we're fortunate to be invited to, so Massachusetts governor holds a FinTech panel, invites a couple of companies to come and talk about FinTech. And the first question that he threw out was, what is FinTech? It's like, everybody's FinTech, aren't they? Anybody every bank would say they're FinTech. Everybody uses technology to serve some problem. And it was a really interesting discussion to start, because for exactly that reason, how do you draw that line? Is everybody thinking about things with a different lens, or is it really just it's a conduit to solving perhaps a different mix of problems if we're all going to have to do that to one extent or another? I will say one of the things that, and this may be kind of a boring answer, is I'm not a big fan of buzzwords, but I'd say that just our own kind of early wins that we've seen in the AI ML perspective, I think people are starting to see that there are some real wins coming. Machine learning has the potential to really change a drastic amount of drastic parts of the FinTech process that we would have approached in one way even just 5 years ago. Now we're seeing things really take off. Look at the lending space. There's very few firms that are straight up decisioning on FICO credit scores anymore. Everybody's doing that with their own internal algorithms and augmenting that with better data. Those are now being augmented even further with artificial intelligence and machine learning, and now you start to see a bigger effort in terms of getting good data integrity and latency and throwing more data into those machines to make improve better decisioning. And that's going to be a really interesting race that's happening across like every sector. So again, not something I could say that's specific to FinTech, but is certainly going to change a lot of aspects of it.
I think I'm going the same direction. If you think about the FinTech propositions, it's very easy to get like a specific niche and scale within that niche. But then to scale, to fight the big guys, is another conversation. And that's where the difficulty is, and it's going to become a scale business. It's going to be like any other business around the globe. You need to have the scale, you cannot compete. Having said that, innovation will not decelerate, it will accelerate. So I think for the students of Babson, I think the word is, there is still space for good ideas to create innovation. Probably you're not going to go to IPO, you're going to sell for a big guy. But that's okay, that's the same money. I mean, it's the same smell, the same thing. So I would say, if you have a great idea, and if you really think you can disrupt a niche, there is still some value to be created for you. And I will not, again, I would go back to say, I still think that finance is very sexy. So.
I would just to follow up on that, because one of the things that and there's, as I think about where innovation is going to come and into the confines of FinTech, I could think about it and give one answer. I think innovation is really going to come from opportunity, and the fact that the barriers to entry are going to continue to disappear for more and more people on the planet. There are other geographies that are going to be able to step in to innovate and sell to more people than ever before because of these patterns of, and it's both empowerment and entrepreneurship and support, as well as technology, things that were not available even 5-10 years ago. Those are patterns of globalization and knowledge sharing that are just moving at a pace that is only going to increase, and you can't slow down, regardless of what single policy of any one nation tries to put in place. I think those are all good patterns.
Great. I'm going to flip that question around as well and ask all of you, is there a certain area or topic or theme in FinTech that you think is being overhyped right now that might not be as impactful as people think?
think if you have a look on the valuations, I think any valuation that you see that is totally disconnected by the value created by that company, you should ask yourself what is happening there, because it's basically based on hope, right? So, and without naming, without putting like sectors on that, I think you should look at valuations and see the real value delivered by the company.
I gotta say it, there's a lot of FinTech conferences, we go to payments conferences. There's a lot of air being spent into blockchain and digital currencies and distributed ledger, which are all a collection of really fascinating innovations in their own right. And yet, I'm still waiting to see what problems they solve and how they can be a conduit for me to service my customers better. I had, without naming names, I had yet another company come and pitch their blockchain-based technology that could totally revolutionize my business. And businesses tend to be pretty rational actors. And if there's a cheaper, safer, faster way to be able to provide the services that you're trying to bring to market, you would think that we would be all over it. The reality is that there's a lot of things that need to mature in order for that to be actually, let's say, scaled. And so I say that while I am totally open to geeking out about what's under the covers, but also a fair deal of cold water in terms of readiness. Sorry, any digital crypto investors out there.
So I have a different take on cryptocurrency, and cryptocurrency does have a great value proposition. It's a great way for people to steal money and for cyber insurers to pay them back.
Right. Great value proposition. Right.
So they're very entrepreneurial. So I clearly have a little edge on about cryptocurrencies because that's how ransomware events are typically paid. But for that's one, unfortunately, but just one of several things that drive cyber risk. So that's the one that most bothers me.
I think I have a say on blockchain that I have used a lot with lots of newspapers and people around the globe, which feels like a picture without a wall. Big, beautiful picture, but there's no wall. So that's how I see it. So.
Yeah, that makes perfect sense. I agree. I think, to me, alternative lending or marketplace lending, any one of these names that companies like Lending Club and Prosper and SoFi have ascribed to themselves, even other public companies like On Deck and Green Sky. These are reasonable businesses, but at the end of the day, for some period of time, they were masquerading as technology companies. And I think the truth has sort of begun to hit home that lending is lending is lending, and with lending comes book value type valuations and not revenue style multiples. And that's a hard reality for the venture capitalists who plowed money in along the way at far more aspirational valuations.
Great. And Jason, you touched upon something earlier that's really interesting, and it's financial inclusion. How does FinTech better serve the underserved and the underbanked? And companies like Tala on the West Coast have really fueled this growth, recognizing that a lot of people don't have credit scores, so creating dynamic credit scores around non-traditional data points so people can really access financial services in a way they haven't before. Can you guys share any kind of companies you've been really fascinated about in this space, or any trends that you see a lot of promise in when it comes to financial inclusion?
Yeah, I mean, say local to us, I mean, I've had interesting conversations with, out in the Bay Area, is a company, Nova Credit, which, tried to take on a nice kind of parallel space to where we're helping international students come from other countries. They'd arrive in the States and then they couldn't, they'd write a massive check for their tuition, and then they couldn't get a car, they couldn't secure housing. There was all of these things because of a lack of a credit history. Being able to augment that process with alternatives, perhaps being able to shine a light and provide some visibility into some data points from their country of origin. Also using some other fingerprints, again, getting into the creative aspect of making some crediting decisions. I think there's a lot of companies that are exploring that space, and I like the aspect of getting really deep into a particular use case or customer base and understand them well. Yeah, I think there's no shortage of trying to be able to bring people along and include them into an economy where they previously have had some walls. So.
in the banking space, I mean, the fact is that banks don't make money off of people with low balances other than through charging them overdraft fees. So banks don't really like that, and the customers are treated horribly. And there's a set of new companies that don't have branches, that have just massively lower cost to serve. In the same way that M-Pesa in Kenya was disruptively inexpensive to move money, companies like Stash and Acorns and Aspiration and a bunch of what we call neobanks are springing up to provide mobile banking services in a way that actually provides fair and inexpensive and elegant banking products to the underbanked and unbanked in the US. Something that has been promised for a long time, and prepaid cards maybe were thought to be the solution, but all of those products historically had really high fees. And so now we have a set of companies that believe they can make this work without meaningful fees. And I'm hopeful that the kind of banking that we all enjoy can soon be available to anyone in the United States.
Yeah, I would just add one of the interesting things that I found is these if new banks are coming and introducing with a much more consumer-centric mindset, which is perhaps a departure from some of the incumbents in the States. And I've been fortunate to be able to have some conversations with some larger banks who were pretty candid about where they think that they're well positioned as these competitors are trying to position their products, and thinking about it in terms of people need to be able to go into branches, they want to get somebody on the phone, all of these channels that are important, and that they saw this as a differentiator that would ultimately allow them to rise above these digital-only competitors. We need to remind them, like raise your hand if you love going to a bank to complain about a problem that you had with your account. These are problems that branches and call centers have been created to overcome, rather than solving the root problem, which is an elegant, sophisticated, working product in the first place. If you think that, hey, I'll just open more branches is a cheaper way to service your customers than actually fixing your products, you're kind of opening the door for somebody to come and sweep your legs out from under you. So I think this is going to be a fascinating space. You see a lot of this heat in the UK, and now it's going to be coming on these shores as well.
I agree with Matt. I think most of the time when you talk about financial inclusion, you think about value proposition. It's not about value proposition, it's about cost structure. So you look at a startup, you look at a company, and you see not a lot of a difference in value propositions. When you see a difference in cost structure, like a much lower cost, then when you need to pay attention, because that's the potential for disruption and for financial inclusion and so forth.
Great. Well, I think we're about time now, so I just want to say a big thank you to our panelists. So thank you, Jason, Matt, Odilon, and Phil. Thank you, everyone, for being here.